So many renters come to their apartment each night thinking, well, this is nice, but it's not mine. And every year the rent goes up a little, and that small dream of finally owning a home starts feeling bigger and harder to ignore. A place where you could paint the walls any color that you want, renovate the kitchen, or plant a garden, all without needing anyone's permission. But then, as you start looking at the prices and the mortgage rates, the dream gets a little bit more complicated. Now, what if buying now isn't as smart as you thought? A study I found showed that 82% of millennial homebuyers regret a recent property purchase. So maybe you aren't so crazy for renting after all. But a home is more than just an investment. It's about finally feeling grounded and stable. But the costs, the responsibilities, and the unknowns, there's a lot of reasons to be hesitant about the decision. So how do you decide if you're ready to leap from renting to owning? Well, today, my AI assistant Tiara and I are going to explain the realities behind owning a home, from the costs to the hidden benefits. Now, as a reminder, like and subscribe if you enjoy this video to support me, and make sure that you stick around to find out more about the 5-year rule and why that's so important before you decide to stop renting and finally buy a place. So we'll begin by looking at how your lifestyle should impact your decision about where you live before you even consider the financial part of the equation. So here's what Tiara has to say about it.
First up, let's consider your job situation. Are you a digital nomad who might jet off to Bali next month? Or are you climbing the corporate ladder in your hometown?
If you want to have a flexible lifestyle, renting is a clear winner. But if you're planning to put down roots, buying could definitely be the better move. If you aren't sure, like I wasn't for years, keep renting something that you can easily afford and continue to save your money for the day when you decide it's actually time to buy. And one thing I know about buying a home, there's really no need to be in a rush. No rush whatsoever.
Next, think about your family plans. Are kids in the picture? Maybe you're thinking about adopting a whole pack of dogs?
Now that I have a family of my own, which includes 2 kids, I can't imagine having to live in an apartment. So generally speaking, they're cramped and they don't have a yard for the kids to play in, and safety is always going to be a concern. Now, of course, if I had no other choice, I'd have to move into one and I'd have to make it work, and many people do. But the point is, if you're in a long-term relationship or you have a kid on the way or already have kids, think hard about how you'll be able to afford all of it. Because if I've learned anything, it's that kids aren't cheap.
And let's not forget about your stress tolerance. Homeownership comes with its fair share of surprises. If you'd rather call a landlord when things go wrong, renting might help you sleep better at night.
Now, if you think owning a home is only about the mortgage payment and the taxes, boy, are you in for a terrible surprise. So just a couple weeks ago, my wife and I, we had to buy a brand new fridge. And the cost, all in, it was around $3,000. And granted, it was a nice fridge, but those unexpected and frankly unwanted surprises, they happen all the time with a home. So don't just have enough saved for a down payment. You have to have enough saved for that and an emergency fund.
Lastly, consider your finances and career. Are you at a stable employer that's likely to be around in the next 10 years? Or are you still a struggling entrepreneur going from gig to gig finding your way?
I've been an entrepreneur for over 10 years. And frankly, there's, in my opinion, nothing wrong with going from gig to gig and finding your way. The key here, though, is you want to make sure that if you're going to buy a house, you don't have to sacrifice your entire life to do so. While it does suck to rent, it's a lot better to rent and have a $2,000 rent payment due every month instead of being, $250,000 in debt from a mortgage. It's a big commitment, so make sure that you treat it that way. And remember, there's no right or wrong answer here. Just make sure that you take the time to think about your lifestyle and what you really need before you make any big decisions. Next, Tiara wanted to compare rent and home ownership to understand the main benefits and negatives of each. Now, I think that this part here is important because I made sure to keep it brief, but it clearly explains the main factors of each situation that you should consider. So first, let's focus on renting.
Lower upfront costs mean more cash in your pocket now.
Unless you've been saving up for a few years, you're unlikely to be able to buy a house. And let me advise you on something before you even do. When you're considering buying a house, especially with today's interest rates, run 2 different scenarios. So first, find out how much interest your down payment would make annually if you invested it, and compare that to how much money you'll be paying annually instead. Now, of course, equity has to be considered, but at today's interest rates, right now, it almost always makes sense to rent instead of buy.
Flexibility is one of the key perks of renting. Want to move? Just wait out your lease or pay to buy it out. Maintenance headaches? Not your problem. Call the landlord.
So I think people severely underestimate the actual cost of home ownership. Now, I mentioned this earlier, but most of the time they focus on the monthly, expenses and the down payment, which is good. But what they don't realize is stuff just always seems to go wrong with the house, and it's always at the worst time. But that's not the only negative of renting. There are actually quite a few more.
Monthly rent doesn't build equity and is a monthly cost.
So for this, I'm going to take a page out of what most millionaires say to do online. And definitely talk to an accountant about this if it sounds interesting at all. But in many cases, you can actually write off the majority of your rent if you have a legitimate business at the residence. Now again, there are legalities here, so talk to a professional. But when you can write off most of the rent, you're effectively living at a 30% discount due to the different tax write-offs that you have.
Pricing changes happen often, and the landlord might decide to sell.
We all know that it's a total pain to move, and every landlord knows that too. So increasing prices, that can happen every year. And when the landlord decides that they want to sell the place, regardless of how much you like it, they can tell you at the end of your lease, you have to leave, and there really isn't much that you can do about it at all. Unless, of course, you want to consider buying the unit yourself, and maybe they'll work with you on like a rent to buy situation. But not all of them will be willing to do that. So now let's focus on home ownership.
With home ownership, you're free to do what you want. Paint the walls, renovate the kitchen, adopt a dog. It's your decision.
We didn't even discuss this with the apartment scenario, but pets are always a hassle when you're trying to rent, and they're never an issue when you're buying a house. But the point is, as a homeowner, you have freedom, which is one of the biggest perks that there is.
Each mortgage payment builds equity, and if property values go up as well, you're going to be able to cash in big time.
I like these points as they are undoubtedly true, but I don't think anyone should buy strictly based on property values potentially going up. Can it happen? Sure, but it's most likely out of your control, and I'd say a better move is to primarily focus on building equity and keep the idea of property values, keep them in the back of your head.
Tax benefits. Don't sleep on these, as there are substantial tax write-offs that renting just doesn't have.
You may not even realize it, but tax benefits of owning go well beyond just writing off the interest paid to your mortgage. So for instance, there's a property tax deduction. So you can deduct up to $10,000 or $5,000 if you're married filing separately in property taxes paid annually. There's also a capital gains exclusion on home sales. So you can exclude up to $250,000 or $500,000 for joint filers of capital gains when you're selling your primary residence that you've lived in for 2 of the last 5 years. There's also a home office deduction. So self-employed individuals can deduct expenses for a portion of their home used exclusively for the business. There's a home equity loan interest deduction. So you can deduct interest on home equity loans if funds were used to buy, build, or substantially improve the home securing the loan. And there are energy efficient home improvement credits where you can claim up to 30% of costs for different qualifying energy efficient home improvements like, solar, things like that.
He's an educated man.
Now, although we have those positives, there are obviously negatives too.
You can expect more bills like property taxes, insurance, and surprise repair bills to surprise you once in a while.
So again, I mentioned it earlier, but this is exactly why I always push hard for people to develop an emergency fund. If you have a house and you have kids, it's an absolute certainty that you'll be dealing with some surprise bills at some point, and you need to have an account ready when you do.
Looking to sell your house? It's not as easy as just packing up and leaving.
If you think leaving an apartment is a pain, just wait till you sell a house. Aside from having to pack everything and move it, keep in mind that with a house, it has to sell in order for you to put it behind you. And while you hopefully make money in the process, it's also not impossible to actually lose money overall, especially when you consider all of the different realtor fees that are involved that you have to pay. Next, let's talk about the 5-year rule and why this is so crucial to consider before making any big decisions.
So, what's the deal with this rule? Simply put, the 5-year rule suggests that you should plan to stay in a home for at least 5 years before selling.
Why is that so important?
First is upfront costs. So buying a home, it isn't just about the price tag. as you've got the different closing costs, right? And that's a big part of it too. Those can be 2 to 5% of the purchase price. And it takes time to recoup those costs through home appreciation and equity buildup. Next is equity. So in the first few years of your mortgage, most of your payment, it actually goes towards interest, not the principal. After about 5 years, you start to build some serious equity in your property. So next is your local market. So real estate markets, they can be very unpredictable. And 5 years, it really gives you a better chance to ride out any short-term market dips and fully understand the market itself. And the last part to this, 5 years is usually the break-even point. So around the 5-year mark, that's typically when the costs of buying become, comparable to what you've actually spent on rent. Now, is this rule set in stone? Not at all. It's more of a guideline. And if you stumble upon a killer deal in your local market, you might be able to come out ahead sooner. But on the flip side, in a slow market, you might need to hang in there a little bit longer. The bottom line, don't rush into buying a home if you're not ready to commit for at least a few years. Renting isn't really throwing money away if it gives you the flexibility that you need in the short term. So only buy if the price is right and every other area that we've discussed in this video really aligns with your comfort level. Now, speaking of comfort levels, one thing that I've noticed about many people is that they're not all too comfortable with not necessarily setting financial goals, but actually achieving those financial goals. Now, this can obviously come in handy if you're looking to buy a house. So if you're someone who struggles with this, I highly, highly recommend that you watch this video right here to help you out. Or you can watch my most recent video over here instead. As always, please like this video if you enjoyed it so that YouTube shows it to more people, and make sure that you subscribe to my channel to unlock financial success one AI chat at a time. Thanks so much for watching.